So yeah, as you're aware, this is a Practical Farmers of Iowa Farminar. Thanks everybody for tuning in. This presentation tonight is with Iroquois Valley Farms, which is the first socially responsible farmland company in the U.S. that's focusing on supporting sustainable food production and family farms. So a really neat organization. And we're going to hear from the co-founder and CEO Dave Miller about the company and also about what they're looking for when they're making investments and when they work with farmers. So also joining Dave tonight is Andy Ambriole, who farms organically in Indiana and works with Iroquois Valley, and he's going to share his experience from the farmer end of things. So I'll turn it over to Dave here in a minute, but for those of you who aren't familiar with Practical Farmers of Iowa and our Farminar series, I'm going to first share a little bit of information about us. So this is part of our Winter Farminar series. We started these back in November, and tonight is the last Tuesday night presentation of the season. But we do have a Farminar this Friday at noon, kind of a special edition Friday Farminar that's this March 17th, not Mach 17 like that says. It's March 17th, it's at noon, and the topic for that one is challenges and opportunities with hazelnuts. And we've got Jeff Jensen from the Iowa Nut Growers Association and Norm Erickson from the Minnesota Hazelnut Foundation. So that is our final one of this season before we start back up again in November. We do about 15 to 20 of these a year. We record all of them, and we've got well over 100, I think somewhere around 130 of these Farminars in our archives at practicalfarmers.org. So if there's any topic in the farming realm that you're interested in, chances are if you went and searched our archives for it, we've got a Farminar on it. So this one tonight is also being recorded, so if you want to go back through and rewatch it or share it with anybody, we encourage you to do that. So a little bit about Practical Farmers of Iowa. We started back in 1985. We've been around for just over 30 years then. And we were founded by a group of farmers who were interested in improving their profitability, their efficiency, and their stewardship. And today we're still very much focused on these same issues, and our membership now has grown quite a bit. We've got somewhere around 3,000 members all around the state of Iowa from farms of all shapes and sizes and all enterprises, and we also have quite a few members outside of the state of Iowa. A lot of our non-Iowa members still gain a lot of benefits from being a member of Practical Farmers of Iowa. You do not need to be from Iowa. Our mission at Practical Farmers is strengthening farms and communities through farmer-led investigation and information sharing. And this mission allows us to help farmers practice an agriculture that benefits the land and the people. Our values at PFI are welcoming everyone, creativity, collaboration, and community, viable farms now and for future generations, and stewardship and ecology. So if you connect with any of our values or with our mission at PFI, we encourage you to join us. There are several member benefits that you can read about on our website that include, special invitations to our events or discounts to our events, the ability to participate in our on-farm research program, participate in our beginning farmer programs. But really, most people agree that the main benefit of being a member of Practical Farmers of Iowa is our network and our community of members. So that's what makes us special. So we encourage you to join us. Talk to me after this, or look up on our website what the other benefits are. We are a big tent. We welcome everyone. Also on our website is our upcoming events. There's a lot of events happening this time of year, and so check that out. There's PFI events. We also list our partner events, other organizations. Chances are there's something happening near you. And speaking of that, we just announced our Spring Cover Crop Field Days series that's starting at the end of this month. So check those out and plan to join us in a field full of cover crops near you. I think we've got 1, 2, 3, 4, 5, 6, 7 scheduled between now and May, and then we'll start our full field day season near the end of May, which will have somewhere around 30 field days across the state. So do stay in touch with PFI about those and join us for an event. These are all free. A lot of them come with a free meal. It's a lot of fun. So a couple of rules real quick. If you want to stay in touch with PFI and our Farminar series, definitely provide your email in the chat box there. I'll put you on our weekly email list. This is, like I said, we only have one more Farminar this series, so it'll just be a good way for us to remind you when we start up again in November. I'll shoot you an email in November, say, hey, new Farminar's coming up. So share your email address if you want to stay in touch. Otherwise, like most of you have done, please share where you're tuning in from tonight because it's fun to see that. And also, Dave and Andy were curious for their own reasons for their presentation to know where you guys are tuning in from because various states have various rules and regulations on leasing and farmland ownership and stuff. So do let us know where you're at. I'm in Ames, Iowa at the PFI office. One other thing, down there on the very bottom left corner of your screen, there is a little poll. We're just asking people to let us know how many people are tuning in from your computer. It gives us a better head count to see how many folks are here listening. We appreciate that. Also, when we're near the end of the Farminar tonight, I'm going to post a link on the screen to give us some really quick feedback. It's just a very short survey to tell us what you thought about the Farminar, but then also that'll give you an opportunity to tell us what topics you want to learn about in the future and other Farminars. So take that poll. You'll be entered to win some free PFI gear, and let us know what you want to see in the future. One final thing here. While Dave and Andy are speaking tonight on this Farminar, feel free to use this chat box to ask clarifying questions while they're speaking. But we do plan to save about 30 minutes for all other questions at the end of the presentations. So if we don't address your question during the presentation, we'll make sure to get back to it before we wrap up at 8:30. But please participate in the chat box there and make this interactive. That really makes it fun. So without further ado, I'm going to pull up Dave's presentation. Dave Miller, CEO and founder of Iroquois Valley Farms, and Dave's going to lead us off.
Thanks, Steve. Welcome, everybody. This is a fun opportunity for us to get in front of what looks to be PFI farmers all over the place. So that's cool. I am one of the co-founders of Iroquois Valley Farms. We started this company in 2007, a little over 10 years ago. And we started with one farm in Iroquois County, Illinois. And now we have over 30 farms in, I don't know, how many states are we in? With me tonight is Claire Massesson, our communications manager, and she's my fact checker here as well. So,
hi everyone.
We're how many states are we in now?
We're in 11 states.
11 states. So we've grown from one farm in one state to 30 plus farms in 11 states. But we haven't changed a whole lot in that process. And I'll tell you a little bit about some of the founding thoughts when we started business, which are still in place today. And one is that we wanted to be a company, and we wanted to be a company that could indefinitely hold the land and give you, the farmer, the option of continuing to lease, because the first 10 years we were just a leasing company. So you could continue to lease or you could buy, but you wouldn't be forced to purchase. And that hasn't changed. We're still set up that way. It's your business. It's not our business. Our challenge is to continue to create an entity, in this case a company, that can hold the land so that you can make your business decisions with a very long-term view of having that land for the rest of your life. So that's was the initial thinking. I suppose I was influenced by relatives that lost their lease on land and lost their business, and so when we started this company, we did not want that to happen. So we knew we had to build trust to get to that point. We didn't expect anybody to trust us. They were just based on what we said we wanted to do. So when we built our investor base, we told our investors that there was no exit, that they would put their money in. We would use their money to buy farms, lease the farms to mostly young farmers, but that they had no exit until we deemed it timely and appropriate to give them an exit. So, and the reason we gave to the investors for starting out that way was that we knew we had to build the trust of the farmers, and we felt that if we showed that we had committed capital from the get-go, that would be a good way to start. So a lot of people told us, well, you're not going to raise any money with that type of a exit plan. And we said, well, watch, because people invest in all kinds of crazy things. I think everybody here probably knows somebody that put their money into something really stupid. We felt that we could show the investors where their money was going, who was using it, what you were growing, et cetera, et cetera. And that was probably a lot better than a lot of things they invested in. So we did raise capital on that basis, and we did it that way for 7 years. So it wasn't until I think it was our 8th year, maybe it was our 7th year, did we finally tell investors that they could exit if they wanted to, and that we would buy their stock back. And as we sit here today, in our 11th season, not one investor, and we now have over 300 investors, has left the company. So we set out to prove what we wanted to do. What that we wanted to prove was that we had committed capital and that we were serious about holding the land indefinitely and not acting as a trading company. So that's a key thing. I spend time on that because it's so important for everybody to understand who they're dealing with. You know, if you're in the farmland business and you're not the owner, or even if you are the owner, you want to know who you're dealing with. And that is the type of uh, commitment that we wanted to show to the farmers with this company. So I start with that. And we started with one farm, like I said, in 2007. In 2008, we bought a second farm. It was actually the same farmer. We do this multiple times. We're trying to help you grow your business. So if you want to own it, that's fine. We'll do a mortgage. And we started doing mortgages a couple of years ago. If you have no capital and you want to lease it, we'll try to do that depending upon what state you're in. So we view this as your business. We don't want to compete with you. We're not farmland traders. When we buy, we only expect to sell back to the farmer. If we are putting a mortgage on a property, we're not looking. Well, frankly, we might do it 2 or 3 different times. So if you want to expand your business, we want to be in a position to help you do that. Now, Andy Ambriole, who is with us tonight, is one of our first farm tenants and one of our youngest farm tenants. Not so young anymore, Andy. Sorry, but he's actually missing an auction tonight that's happening in Indiana. So we feel sort of bad about that because we have purchased. Andy? How many times have we purchased farms for you to lease?
I believe 5 farms so far.
5. Okay. So Andy holds the record right now for that. So he's missing his 6th tonight because of this Farminar. So I hope everybody gets good value out of this. So that's sort of the my beginning overview is that we're set up as a company. This is our business. We're not a fund. We are not looking to flip into a new fund, after 10 years or go out and raise new capital to start fund number 2 or 3 or 4 or 5. Our investors are typically individuals who invest mostly their retirement account money with us because they think it's a good long-term investment. And we started the company with rollover IRA funds. And we still have a lot of IRA money in here. In fact, I have my IRA money invested in the company, as does my wife. So that's been a good, solid, secure form of capital for what we do. So getting to how we might be able to help you, because we take a long-term view that this is your business, not ours. We don't look for land to purchase. In fact, if somebody if somebody comes to me and says, "Oh, Dave, you should be buying land in Ecuador or something like that," um, we know that's just a trade. They're just really trading. So we're completely reactive to the farmer. We don't look for land to buy. You have to bring it to us. It's got to fit your business. Otherwise, it doesn't make any sense, and we have no interest. So um, you have to trust us, and that's why I spent so much time talking about how we build trust. But we're not. If you bring us a land opportunity, um, we're not going to sneak around you and try to buy it for ourselves. That's not how we're set up. This is all about your business. So therefore, we're reactive to what works for you. Um, Now, the bad news for some of you in Iowa is that we can't do leasing in Iowa. We do leasing in other states, but not in Iowa or in Minnesota. Um, so we're doing mortgage lending in Iowa, Minnesota, and just looking at where the other states are here. Those are the only two states I see that we can't do leasing in. Nebraska, I'm not sure about. I think the laws have changed there recently that might allow us to do that. So as we're currently structured, we can only do mortgage lending. Um, Now we do run across an awful lot of people that say they can do ownership and leasing uh, in Iowa and Minnesota, and so we're happy to give you our 2 cents if you want to use this as a sounding board. We're always happy to do that. I know Teresa Opheim is here as well. We met Teresa in 2011 when we were purchasing our third farm. You can see we moved pretty slowly there in the beginning years. In fact, we always say we're slower than slow money, but we've always baby stepped this company um, and made lots of small mistakes, but not necessarily any big ones. So once again, we want to stay in business for the long term. So Teresa, that conference where I met you in 2011 is coming up this week. Are you coming? Oh, I'm sorry, Teresa, you can't talk. So anyway, I'll speak for Teresa on that then. But there's a good food festival here in Chicago that we are usually on a panel. If any of you are in the Chicago area this week, stop by and we'll have a table there. We do a lot of outreach at conferences. I think we started coming to the Practical Farmers of Iowa conference in 2011. It could have been 12, maybe it's 2012. We came for many years, even though we couldn't do any business in Iowa at the time, because we wanted to build relationships. And once again, we're thinking for the long term. So now that we can do mortgages, that has changed, and we have in fact done business in Iowa now. And we can get pretty creative. So even though we can't do leasing in Iowa or Minnesota, we get pretty creative on the mortgage side. So if you're a young farmer and you come across a land opportunity that fits your business, and you don't have a lot for the down payment, you should still talk to us. Don't rule yourself out. Let us do that. We try not to say no. And so don't assume. I would say don't assume anything. Talk to us. That's an important optimism that you should show as a farmer. Um, we expect you to work hard to try to put the deal together. So why not get started right away with a show of optimism, even if you know that you may not have all the funds you'd like to have to make this happen. We have the ability to source capital in many different ways, so test us out. I think that we should go to, everybody can see the slide that says our farms. I'm not going to spend a lot of time on this one. This has a little bit to do with how we manage our business, but we say we grow organically, and by that I mean we didn't start with $100 million that we're just going to run out there and buy a whole bunch of farms all over the place. We buy one farm at a time. We work with one farmer at a time. And we started in Illinois, and then we expanded to Indiana with Andy, who you'll be hearing from. And then I think we went to Michigan, Kentucky, um, New York. We now have a farm in Montana. We're doing mortgages in Iowa and Minnesota. Believe it or not, we haven't done a deal in Wisconsin yet, but that's bound to change. Um, we have a farm under contract in Virginia, and also looking at doing a purchase in Ohio. So we do have a national vision. Farming is a risky business. I don't have to tell anybody that. So um, it's our view to stay in this business for more than one generation, in fact, for many generations. So we intend on being diversified. So when I say diversified, I mean that if you look at owned asset value by farmer, the pie chart at the top to the right, you can see that we manage our exposure risk as we grow. As we continue to grow, nobody's going to be more than 10% of the company. Even if Andy keeps buying farms every other month, we'll have to keep an eye on him. But that is risk management is an important component, when you're in the financing business. So we do manage that. The bottom pie chart just shows that we're now doing mortgages. The mortgage product has been huge. We knew that there was a great need for sustainable finance here, and companies that would look at your business plan, um, even if it was different, and consider it rather than just completely throw it out because it wasn't a commodity based business plan, or it wasn't what the local farm board was used to seeing, or you name it. So we're happy to encourage diversification. We see that more and more uh, in the future here, as agriculture changes. So I talked a little bit about this. Uh, we don't use the word investors a whole lot. We have stockholders, and so our shareholders or stockholders are across the country. That's key. You're not going to find that with most farmland entities that usually are controlled by big money. That's not spread out. It's more concentrated. Usually, a large family office, or maybe a corporate entity um, out of the country sometimes. So, once again, we're owned by individuals across the country that are putting their retirement savings often into what we do. So we match up family investors with family farmers, and we've done that now for 10 seasons. It's working. Um, and our challenge is to try to get more families to invest quicker so we can keep up with an increasingly young farmer base that's, as we see it, changing agriculture in this country. These charts tell you a little bit more about the company. We're young, we're next generation, so 72% of our tenants are millennials. So we're willing to take risk. We do. Now a lot of you young farmers are your family is not new to farming. So for the most part, we're working with third or fourth generation even farm families, but we're working with the new generation in that family. But we also have first, second, third generation families that we work with as well. We're developing more and more programs for young farmers, and Teresa is helping us with that. We got a pretty big grant from the NRCS last year almost $1 million to help subsidize lease rates and also provide other in the soil type benefits and support for young farmers that are transitioning. So mostly those benefits are for the first 3 transition years, which are the hardest. On the acres side, we now have as a company over 4,000 acres that we own. We're starting to mortgage acres too, as I mentioned. And frankly, I expect that the mortgages will exceed the acres owned here in a few years, which is great. So we're able to do both. And for some families, we do. So we will lease and we will mortgage for you, depending upon what you want to do. So it's a nice combination to be able to do. We're doing refinances as well. Those don't show up here on under owned acres, but the last refinance we did was actually in Minnesota for a farm family that needed to recapitalize their farm, and we were able to do a complete refinance. Our refinances often will save a farm family a lot of cash flow because we don't look at it. We don't look at these things statically. We look at your whole business. You know what makes sense here for your whole business. So the refinances are helping farmers grow their business because we're cleaning up and we're often extending payments for your existing operation, which allows you then to grow. So that's, something we're going to do more and more going forward. We have worked hard to earn the trust of not only our farmers but our investors, and we've been named to we've been given a number of different accolades over the years. Best for the world as a B corporation. That's a benefit corporation, which means that it's not just about the money. It's about looking at all the benefits that we're providing to farmers and investors. I can tell you that we're pretty innovative with regard to securities offerings. We want everybody to own our notes. We want everybody to own our stock. We think that's a socially just goal to have. It's not an easy goal to have for a company as small as us, but we're making it happen this year. We specifically formed a real estate investment trust. We're the first company in the country to form a real estate investment trust that's focused on family farmers and sustainable agriculture. So we're very excited about that. We're offering some short-term notes for those people that aren't doing anything special with their rainy day money. Why not buy some of our short-term notes that make a 1-year commitment, and we use the money to help subsidize lease rates for young farmers. So this is something that even farmers invest in. So we love that. We have a number of farmers that are also investors, and certainly they know what we're doing with their money, so it's a good fit. Those of you who have friends and family that are in investing category, keep us in mind, because that's the other part of our business. That's how we fund the mortgages and the leases that we do. There's some questions here. I'm not sure that I'm thinking that we should save these questions for later. Steve, you want to give me some guidance on that?
Yeah, sure. So Teresa threw these questions in here, and this was the last slide that we had in mind before we turned it over to Andy for a little bit. But if you want to go, if you want to hand it off to Andy before we go through these, that's just fine. Whatever you prefer. These were just to kind of, yeah, get some discussion, I think, started, get some people thinking about how this works.
I'm going to suggest that we go to Andy now, because I think what he has to say is going to answer some of these questions. So I think it's probably better just to move to him, and then at the end handle this.
Great, that sounds great. Andy, I'm going to pull up your slides right now then, and we'll give you, 20 minutes or so, and then we can come back to all this stuff.
Okay, sounds good. Well, good evening, everybody. Thanks for tuning in, and hopefully we've got some good stuff for you tonight. Okay, well, I'll go ahead and get started here. Like I said, my name is Andy Ambriole. I'm from Northeast Indiana. Been a farmer with Iroquois Valley since 2012. This is a picture of my family, my wife Katie, and my two little girls, Kana and Kinsey. I got started farming early on as a kid. I grew up on a farm. Been involved in farming my whole life. Always loved getting my hands dirty and just enjoyed about every aspect of farming. Early on, we raised hogs, and when the hog prices crashed in the late 90s, my family got out of that. Growing up, I also raised a couple acres of pumpkins for a roadside stand just to earn some extra spending money. I got started in organic farming in high school. I put up a greenhouse and raised organic tomatoes, and that was kind of my start in organic. And then later on moved outdoors into field crops. I say probably most of us are familiar with what organic means. I'm going to focus on the last part of that, the 3-year transition period. I guess in my opinion, that's probably the toughest part of all the rules and regulations. That you have to operate your farm organically for 3 years before you're able to get that premium, and at times that can be financially difficult, especially when you're just starting out. That's kind of when I ran across Iroquois Valley Farms. Um, and their help in providing some of that transition assistance, and also just partnering up for the long term, because you can make that 3-year investment, but if you can only get a 2 or 3 year lease, it's not worth it for the farmer to make that investment in the transition when the future is unsure. I actually first got introduced to Iroquois in an article in the newspaper, and we've just kind of went on from there. So for me personally, why I decided to farm organically, I believe in good biological farming practices, and organic right now is the only way that you can actually market those practices to a consumer that's actually seeking them out. You can raise cover crops on your farm. You can do a good job farming, but at the end of the day, at least in my area, your corn is going to go in the same pile at the ethanol plant as everybody else's. So, you don't really get that market uh, differentiation when you sell into the conventional commodity market. Also a good reason to go organic. You look at organic food sales over the past 10 plus years. It's gone up every year. Most years double-digit growth, and that trend has continued. So the market is there, and folks are really wanting more organic food. Kind of the problem with that is, the market demand is there, but as a nation, our percent of organic farmland hasn't really changed a whole lot. So that can be a problem when food companies are wanting more organic products, but there's not really anything out there to buy. So basically, what's happening today is a lot of the organic grains are being imported. This chart just shows how many million bushels of organic corn we're importing every single month into this country. And this chart just kind of shows some of the countries of where we're getting it from. A lot of these countries are considered, third world, and not very friendly. So, we as American farmers are kind of giving away that market. This chart just shows the organic soybean imports, and then countries where we're getting the organic soybeans from. Kind of an interesting article I ran across a while back about Russia trying to be the world's supplier of organic grain, and they're actually doing a fairly good job of it. They've got a good land base, and this is a market that as most American farmers are ignoring, and it's a good viable market, I think, for us that want to pursue it. This just shows basically all the major food companies in this country have some form of organic brands and are participating in the market. So it's the organic food industry is long past the small niche market that it was 10 or 20 years ago. It's actually a major market that major multi-million-dollar food companies are involved in. This just shows another couple large companies that are trying as hard as they can to increase the organic supply. General Mills is very into increasing organic farms, therefore increasing their supply of organic grain to make their products. The Andersons, which is a major conventional fertilizer and agronomy company, have started an organic division and are actively trying to educate and equip farmers to produce organic foods. And then Costco as well have a lot of programs for organic farmers. And that's kind of another way Iroquois Valley Farms helps. It helps farmers expand their business. I started out with 50 acres and now up to around 1,200. So without the help of Iroquois Valley, there's no way that I could have grown as fast or as much as I have over the past 10 years. When we think about organic, maybe we get some pictures come to mind, maybe the hippie movement, maybe, farming the way that they did 100 years ago. Or, you might picture, a lot of intense hand labor, things like that. But, really organic farming today, we use a lot of technology, a lot of things that they didn't have a generation or two ago when everybody, gave up cultivating for chemicals because it was way easier and you didn't have to sit out in the tractor all day in the beating sun and eat dust. So, today's tractors, we have air conditioning, we have closed cabs, we have even a radio if you want to listen to some music. So, the technology is continually changing, and as organic farmers, we're able to use it. Even things from RTK guidance to cultivators that actually have cameras on them that can see the crop and see the weeds and guide the cultivator to within an inch of that. And then down the road, you hear things about driverless tractors and things like that can really help cut down on the additional labor that's needed for organic farming. And along with all the new technology and new innovations, Iroquois Valley is very unique in how they provide financing that, a lot of larger ag banks, they don't know anything about organic. It's different and they want to stay away from it. So, I've had a couple experiences that, there is a big need for, education, in the banking industry about what organic farms do and what type of financing and terms that are needed. But until that time comes, Iroquois Valley has filled that gap and has been a great blessing. I'm just kind of go through my typical farm, the crops that I grow and different things. Just kind of a quick overview, so you kind of know what I'm doing here in Northeast Indiana. Crop rotation is very important. It's required in the organic standards, and it's just common sense for most farmers. I usually start out the rotation with soybeans. That's a picture of cultivating soybeans the final time. There's the soybeans at harvest. After the soybean harvest, typically I'll go to wheat. I'll usually spread chicken litter ahead of the wheat, um, and then drill the wheat in the fall. That's the picture of the wheat as it emerges. What might look like weeds is actually the tillage radishes. I like to include a few pounds of radishes in with the wheat. And then after the wheat, I'll usually frost seed some red clover or drill in another cover crop. This is the red clover in the spring, right before getting ready to plant corn. So I'll run this Salford disc over the clover and kill it, and it will start to release nitrogen for the corn crop. This is my planter setup. I'm set up to put dry fertilizer beside the row, and then liquid fish and beneficial microbes right in the seed furrow, right as I'm planting. This is a picture of corn as it's after first cultivation when it's real small. And then after the corn, usually in late August, I'll go in with a high boy cover crop seeder. I'll get that cover crop started early on, so it gets up and growing before harvest. It kind of helps spread out the workload at harvest, and as well as helps get that cover crop established. Cover crops are a real important part of my farm. Yeah, the cash crops, corn, soybeans, and wheat help pay the bills, but it's really the cover crops that build the soil and build the long-term fertility and just really help improve that soil. These are a couple pictures of we're going to have large rain events. We have in the past, and we're going to continue that in the future. So it's up to you to be prepared how you're gonna handle that. So two different pictures of two different management choices. One on bare soil that's eroding quite severely, and another one with a cover crop that the water's running clear, that they're not losing any soil in that picture. So the choice is up to you. It just depends how you want to manage. This is some annual ryegrass cover crop in the spring, right before soybeans. This is some oats. This is a good mix ahead of corn, the annual ryegrass and crimson clover, really good nitrogen producer. This is a mix that I've used after wheat during the summer. It's a 14-way mix of various blends of cover crops. You really get some really good synergy, things like that. I really like the multi-species mixes. And then this is another 7-way mix in the upper right-hand corner. You can kind of see the different species individually, and then you can kind of see what they look like in the field. This is a picture of what the cover crop looks like at corn harvest with the ryegrass growing as we're harvesting as a nice good green carpet underneath the corn. That's what it looks like in the spring. Some nice green coming back after a cold hard winter. And then this is just a picture, when done right, this is what soil should look like. Wormholes, good aggregation, lots of roots, lots of active earthworm population to help break down your residue and feed your biology. This is just some beneficial insects that I see in the fields. Lots of good biological things going on. The cover crop mix, especially buckwheat, really attracts honeybees. They love that. The beekeepers love it. And it's nice to see all the beneficial pollinators and other beneficial insects. When we as farmers usually worry only about the bad bugs, we forget about all the good ones and the roles that they play. This is just a picture of some earthworm channels that even in with the tillage that being an organic farmer that I have to do for weed control, the earthworm population is really resilient, as long as you provide a good food source for them. So this is just a few days shortly after tillage, and they're already, creating new burrows and going about with their business after I wreck their world. Another reason for cover crops, we've seen some algae blooms here in the past few years. This is a picture of Lake Erie a few years ago. Locally, we had some problems with a reservoir in our county that 2 dogs actually died from some of the blue-green algae. As a soil and water district, we've been working on that, and I've been involved in helping with that problem. This slide just shows, the simple value of a cover crop. Cereal rye basically will cut the nitrate leaving the field by over half, and in some cases 2/3. Really, we as farmers have paid good money for that nitrogen, so we hate to see it leave. So with good biological farming practices, we can prevent excess nutrients from leaving our farm, as well as build our soils and retain those nutrients for future crops, so we don't have to buy so much fertilizer. And that's another good thing about Iroquois Valley. The partners. I don't want to call them investors. I call them partners. People are interested in all the additional environmental benefits that goes along with owning a small piece of organic farmland. We as farmers are doing a great service, and a lot of people want to be on board and support that. So it's a great fit, and everybody wins in that situation. We're producing good, clean, nutrient dense food, and doing good environmental work as well. That's all I have for right now. I think we can transition back, and if we have any questions later on, that we can discuss that.
Sounds great, Andy. Thank you. Yeah, and to everybody listening, do be thinking about your questions. I'm going to pull up back to Dave's presentation, and they'll continue a little bit about how to work with investors and what they're looking for. But do be thinking about your questions. Put them in the chat box when you got them.
Yeah, thanks, Andy, for making that look so simple. Most of the farmers that we work with are not startups. Usually, you've already got a business. You're already been farming for a while. You have some idea what you like to do, and therefore you're able to put something together that you would call a business plan. We, those of us who started this company, most of us have been around for a while. We don't ask for a lot of background information, but we do like to see a business plan. We like to see it in writing. It doesn't have to be, fancy, but we want you to have thought about this and to be able to explain to us, why we would make this investment, either as a lease or as a mortgage. Believe it or not, we don't have a loan application. You'd think after 10 years, maybe we would have got around to developing that, but we haven't. So we really put it on you to put this together. And we will run a credit report, so you should be aware of that. It's important to develop a good credit history, that's going to be part of any credit decision that we make. If you don't have perfect credit, we're going to listen to you about why that is, and we're humans. We will listen to your story. I think communication, in terms of skill sets that we like to see, good communication is very critical. We're happy to answer questions. We're happy to help you develop your business here, and expand it. But it's a two-way street here. You've got to be an equal on that side, and we don't just expect to answer your questions without you coming to us first. So we do like you to be proactive here, in that sense. That's one of the problems we've seen over the years with some of the relationships that we've had. The communication skills have been lacking sometimes, and we do like to see strong communication skills with our farmers. It just is, with all the problems that can happen, if we're tuned in, to your situation, we can help you. So I'm going to suggest that we take questions, Steve, as we go. So I don't want to just ramble on here about what it's going to take to for you to get past our credit people. So I would say if anybody has questions, please, start putting them in place.
Yeah, as we transition here, I would add that the communication is definitely number one, and the great thing about working with Iroquois Valley so far has been they understand that we're at the mercy of the weather and things can happen, but there's more than enough understanding on that end. But you do have to be in communication about what's happening on the farm and things like that when problems do arise.
We have actually I see we have a question already. Steve, do you want me to go ahead and read the question, or how do you handle this?
Yeah, Dave, if you see it come in there, go right ahead and address that. Yep.
Okay, well, I see Lenny's asked a question. I'll read it. On the investment side, what is the minimum to invest, and what is the rate of return for investors and partners? So this is on the funding side. Um, as a company, we issue notes, which are the notes pay a fixed rate of interest for a set term. Just to give you some idea, our 5-year notes, which have been sold at a minimum of $25,000 each. The last rate was something around 2.5. I know they've been higher, 2.5 to 3%, let's say, is what a 5-year note pays. Um, it pays interest semi-annually. So it gives you some idea of how we're funding ourselves. On the leasing side, we're pricing our leases. Usually, our base rate on our leases would be priced at 3.5%, a 3.5% return. So not a big spread there between what we're borrowing at and what we are leasing at. In fact, the way we look at this as a company is that we really don't make money for the first at least 3 years of a lease. And you may not either. So that's why the long-term perspective is so important here for everybody. Um, let's see another question come up here. How does one become a stockholder? All right, that's a good question. Iroquois Valley Farms, as a private company, we're not a public company, it has been, I like to say, confined to accredited investors only. So, because we're not a public company and we have a special exemption granted to us by the SEC, we can issue securities, but only to investors that have a certain net worth. And these investors are defined as accredited investors, which the SEC defines for us and says it is if you have $1 million of net worth, not counting your house, you're an accredited investor, or if you have $200,000 of income as an individual a year, you're an accredited investor, et cetera, et cetera. So basically, wealthy individuals are accredited investors, and we've been restricted to only dealing with them for 10 years now. This year, however, we're breaking out of that confinement that the SEC has put around us, and we will be coming out with an offering later this year that is oriented toward anybody. We haven't set the minimum amount yet, and we're having to file a different type for a different type of an exemption, but we're going to spend the money to do it, and so we expect by the fourth quarter to have an offering that anybody would be able to buy into, regardless of your wealth status. So we think that's a socially just thing to do. we think that will enable thousands of people to buy our stock. We love that idea. We want to engage the youngest generations out there that can invest, because frankly, it's the only way that we can keep up with the demand. So we see more and more young people coming in there, taking over farm operations, perhaps expanding those operations with a little more of a healthy focus. We want to support that. So we want to engage millennial investors as well as millennial farmers. We want to connect those two together through our company. So we're excited about that. That's the only way we're going to keep up with the demand as I see it. Andy, do you want to talk a little bit more about the standard lease arrangement that we have?
Yeah, I can. This basically the standard lease arrangement, like Dave was saying before, ends up being about 3.5% times the purchase price on the land. Um, so just for rough, easy figuring, if the land's $10,000 an acre, that the lease payment becomes $350. And then also, and that's usually the base rent through the transition years, and then once the farm gets certified, it goes off of gross income, and it ends up being a 1/3, 2/3 crop share split, where the tenant gets 2/3 of the income and pays all the crop expenses, does all the work, and Iroquois Valley would get 1/3 of the gross receipts from that farm. So whether, depending on your crop rotation on that farm, whether you're growing one crop or five crops, it just basically, once it gets certified, it goes off of total gross income off the farm. And that allows, some risk sharing, that allows some upside potential, for Iroquois Valley, once you get through the transition years. And it really, it's worked out to be a win-win for everybody, into the once you get through the transition years and into the organic years.
Another sort of carrying forward on the mortgage side, as I mentioned, we just started doing mortgages this year, and we've done a couple in Minnesota already. We've done at least one in Iowa. Um, we are doing purchases and we're doing refinances. Um, on the purchase side, normally we require 25% down. But I can tell you that we work very hard to violate that rule, and we've done as little as no percent down. So we are willing to stretch. It really is a situational analysis where we're looking at your business, how experienced you are, um, you know, um, the land and the benefits that the new land might bring to you. So we're willing to reduce our standard down payment to something that hopefully is affordable for you and it helps you get started. So that's why I say, please, come and talk to us if you have a great opportunity to purchase some land going forward that's going to expand your business. We would definitely want to look at that situation and listen to what you have to offer. So on the mortgage side, the rates, we're doing typically 5-year rate commitments. The rates have been in the 5% range. And we will go interest only for the first 5 years. So it's a huge benefit to you, especially if this is a new piece of land. We don't require amortization often. We understand how hard it is to get going and make money. And we want you to have the time to do that. So we've been very flexible with regard to the terms on the mortgages. Not everybody is willing to do 5 years interest only. We have done it multiple times for the mortgage product. We will do 3-year fixed as well, with renewable options on either the 3 or the 5. We're probably going to be able to do much longer term financing because we're developing more relationships with our farm credit lenders. So we will be able to offer longer term fixed rate options as well as we grow the mortgage business. Frankly, we're getting so many mortgage requests that we might have to set up a separate mortgage company. But we'll baby step into that. I think we have another question here. Oh, by the way, we're taking all questions, so don't worry about it. Doesn't have to fit into a box here that's on the screen. Here's a question from Greg. Would it be possible to create a subsidiary B corporation in Iowa with a smaller number of investors so that you can own land in Iowa? Well, Greg, we'll have to give you extra credit for creativity. That probably is possible. And we have chosen so far not to set up separate special purpose entities to do business in a particular location. If I can't rule it out, I can just say that so far we have chosen not to do that and instead offer a company that's as diversified as we can get, but keep it simple. Securities regulations are complicated, and to have different entities and register securities in different states gets very complicated. We like to keep it simple, and so far that's what we've done. Now, having said that, we started the mortgage business last year, so that's already got us excited about growth opportunities. I would say right now for the states that we can't do leasing in, we're going to be particularly creative with regard to financing options. So that might even be better for you.
Yeah, Dave, this is Steve. I was going to say Teresa mentioned in the chat box asking about this slide with with the frequently asked questions from farmers, and one of these was what I was wondering about as well, that final one, because Andy, or you mentioned that Andy tonight is missing an auction, and so I was curious about the process. So yeah, if Andy was going to go to auction and look to expand with another farm, and it might be different with Andy because you've worked with him on like 5 farms now, but what does that process look like from when you identify a piece of land to when you approach Iroquois Valley to when you can close and go through that whole process?
Well, I guess yeah, I can go into my story.
Andy, you should take that one.
Okay, all right. Yeah, I can kind of expand on my story a little bit. I was in communication with Iroquois Valley for almost 2 years before we were able to get together on the first farm. Part of that time period was, maybe you might say like a courting time period, where I was getting to know Dave and a few other people, and they were kind of getting to know me. And then, it was a little while before, a farm that worked for me came available. So, that's kind of a two-part question there, but, definitely, don't call up and say, hey, there's an auction next week. Can you go to it? Being a new person, it takes time, and the more time you have, the better and more thorough job we can do. So, I would say probably, it would be nice to have, say, 6 months at least to kind of get to know you, period, and then, probably need to have at least 30 60 days is even better, to actually identify a piece of land, and then before you would actually take action on towards a purchase of it. So definitely, the more time, the higher percent of success that we can have.
Yep, that's really good to know. Looks like we got a few other questions coming in to the chat box. Some folks are typing here. Andy, looks
Oh
like
yeah,
there's a question. Yep, yeah, for you if you don't mind.
yeah, the rent structure. Yeah, like I said before, basically, the initial rent, or what we would call the base rent, is 3.5% times the purchase price. So the example that I used before, if Iroquois Valley buys the land for $10,000 an acre, your rent payment would be, minimum base rent payment would be $350 an acre, and that's usually the rent that's paid through the transition period. And then, also, as part of the lease structure, there's a variable rent, and that rent is works out to be a 1/3, 2/3 crop share, where 1/3 of the gross revenue from the farm would go to Iroquois Valley Farms, and then 2/3 would go to the farmer, and the farmer is responsible for all crop expenses, all labor, and all the work that goes on the farm. So
Steve,
hopefully
why
that
don't I
answers
ask
your
some?
question. If it's a little bit vague, but it's easy once you kind of get working with it, I guess.
Um, Steve, so we know that there are going to be situations where we're not going to get a 6 month notice. That's inevitable. Um, Certainly is our preference to have more time there to build a relationship. We have worked as quickly as 3 weeks, start to finish, where a farm family has come to us with an opportunity, um, where we have put together a bid, gone to auction, and contracted to purchase the farm, start to finish within 3 weeks. So that does happen. It can happen. So once again, give us as much notice as you can, but we understand sometimes that we may not get the ideal amount of time to make it work.
Yep, that's great information. Thanks, both of you, Dave and Andy. Um, so there is a question, I guess, about maybe looks like alternative farming rather than just organic farming. Someone's asking about if you've invested in anything. I guess you could say anything other than organic cropland. He's asking specific, or he or she's asking specifically about vertical farming or aquaponics. You get anything crazy like that?
We have, from the get-go, Iroquois Valley Farms has always been a in the land, in the soil type company. So we have not. Um, we know there's a great need there to do more alternative financing, um, and maybe someday we'll start a separate company to do that. But so far we have not.
Great, okay. So Dave, I don't know. I think there's a few more slides on this that we haven't got to. If you want to go through those while there's no questions in the chat box, that might generate a few more. Yeah, I was curious about this information. I know that you asked for a business plan on paper, um, and you said you don't ask for anything real polished, but I know a business plan is always a work in progress, so I assume like maybe with if Andy is coming back for, asking for an investment in a second or third farm, does that always have to be updated? And what else do they have to have ready to share, whether you're a first time, um, you know, person or someone like Andy who's coming back?
Well, balance sheet, certainly we require a balance sheet and a, projected income statement that's part and parcel to a business plan. Are you going to make money? And if not, when? The balance sheet, of course, if you have any current debts, what are your assets? What are your liabilities? Basic stuff. Any savings, any liquidity. We often have to try to build liquidity in here. We'll use other family support. We'll, um, try to get creative when you don't have a lot of liquidity. We've worked with a lot of newer farmers there where maybe there is some family money that can support them going forward to get started. We have a lot of different ideas on how to try to make it work. But at the end of the day, we do take a lot of newbie risk. We didn't get to be 72% millennial by accident. Um, Tax returns, frankly, I don't know that I've ever reviewed an applicant's tax return. So, will we ask for them? Maybe. So don't be too shy about that requirement. There's a number of questions about the farm itself. What are we concerned about? One of the things we're concerned about would be easements, and especially water and mineral rights. Are they coming with the land? Does somebody else have them? Is there a coal mining company that's got all the mineral rights tied up? Um, so far, we have not. Oh, let's just say, very, very rarely made an exception with regard to the mineral rights. I don't think we've ever made an exception on water rights. That hasn't been a problem for mostly it's been too much water. So we haven't had a water problem here. But on the mineral side, we want to get those. If we're buying, we want to have them. We don't really want to see you go through all the hard work to transition that land and then have somebody come in and frack it. So we really aren't interested in that type of a situation. Um, we've walked away from deals where we couldn't get the mineral rights. We've also negotiated with whoever held those mineral rights to buy them out so that we could move forward. So that's something to be aware of. We judge our diversification by county, not necessarily by state. So we keep track of how many different counties we're in. The weather can be completely different between one county and another. So we're aware of that. A lot of our families are rooted in one place for 100 years. This is a big plus. Um, and as a company, we take a lot of comfort in that. I think I already mentioned the credit score. So good credit scores, frankly, we don't even have a minimum, but we're certainly looking for something that's above 600 on the credit score. And we will run a credit risk. We will run it on the spouse or partner as well. In fact, on a lot of our leases or our mortgages, we have your partner on there as well. Um, or we might have the parents on with you as a guarantor. It just depends on the business situation that you're running and how it's working. There's an awful lot of land transfers that are happening, so sometimes we have more than one generation liable on the lease. We'll have a business. It can be a business too. You may have an LLC set up. In that case, we're going to run a credit report on the LLC as well. Red flags. I don't know. Andy, did you have anything to add here on the red flags?
Um, I don't know, not really. I mean, that's kind of part of the get to know you process. I don't know if there's, it's hard to kind of point to things that are a definite no. But no, it's probably just more a get to know you process. I mean, I know the last one we had kind of talked about, good communication throughout the whole process, and you know, failure to provide good communication, you know, before a mortgage or lease is signed is a pretty good, indication that after the mortgage or lease is signed, it's that situation is probably not going to get any better. So, good communication is valuable at all times.
I think persistency is pretty important here. As Andy mentioned, or maybe what he didn't give you the details on, is that we went to a couple auctions together. One auction we didn't bid. We wished we had. Another auction we got outbid. It was actually, I think, the third time that we were successful. Um, so we're used to that. A lot of times it just doesn't work out for whatever reason. So we'll keep at it. And if you keep bringing us opportunities, eventually something's going to click. Um, with Andy, it was the third one. Sometimes it's the first one. Um, Negotiating these deals is very lengthy. It's very time consuming. It can be very frustrating. We're used to that. So we'll hang in there. We'll try to be flexible. You're looking at a family there that we provided a mortgage for in Vermont. They had found their dream farm in Maryland, rebuilt the farmhouse. It burnt down, I think, because the dog knocked over
Lamb.
a lamp. Um, and they wound up relocating to Vermont and starting over. We provided them with the financing. I think probably when a lot of other people would have said no, we said yes because we listened to their story. Um, we found ourselves a lot of times, giving people a second chance. So we're very sensitive to that. Um, you have to tell the story though. But then if it all fits together, we're going to probably work very hard to make it happen for you. So we try to be very flexible. It makes us a little bit different. We have farmers in our board. We're a board managed company. So Andy is on our board. Teresa Opheim, who is listening here, is on our board. We have two other farmers on our board. So this makes us different, than a lot of people. We have farmers that are investors, as I've mentioned. We're really set up to help you grow your business. So, um, we're not heavy on structure. We're big on stories. So, I'd say we're just in the question period now.
Yeah, we've still got a few minutes here for questions, so if anybody's got one, now's the time. There was that page with some frequently asked questions earlier in this slide. There was one that asked, is it necessary that that the farm is organic or transitioning to organic? It looked like some of your pie charts earlier, they were all organic or on the way. Is that a requirement? You might have mentioned that.
As a company, from the beginning, we wanted to be focused as much as we could on healthy farm practices. The co-founder of our company is a medical doctor. He's actually my old college roommate. Um, we wanted to have some type of benchmark to be judged against. So 10 years ago, we picked certified organic as the benchmark. We didn't know that we would stick with that. Um, we knew we wanted to get started with some type of a third party benchmark. And in 10 years, we really have not, we haven't compromised a whole lot on that. Now, if you're doing a pastured operation, we're very flexible with regard to pasture, or if you're raising hogs in the woods, things like that. Typically we don't require certification for. So it's not typically hard and fast. For row crops, I don't think we've ever made an exception, and I don't know that we intend to. So there's a certain comfort that comes with being consistent. In this regard, we have not been very flexible, and I don't know that we will. If you're not sure, then you should call us and talk to us about what you're thinking about. There might be reasons why it might take you longer to transition, or you might have good reasons because you've already built up your own business without being certified, and you want to tell us about that. We're happy to listen. So it's one of those things where it still depends, but for the most part, almost all of our farms do get the land. The land gets certified. Andy, you want to add anything to that?
No, I guess not. I mean, it's like I had said earlier, organic is kind of the easy identifiable standards, that are available in the marketplace. Yeah, it's not perfect, but it's about the best thing that's out there, as far as standards and how to go about it. So yeah, I mean like I said before, it's not perfect by any means, but it's about the only common standards that are out there.
Well, we can give it one more call for questions here. We've got a couple minutes. Looks like somebody might be typing, but um, well, I'll do another plug if anybody hasn't already, clicked the link on the screen here to give us a little feedback and tell us what topics you want to hear about in the future for our Farminar series. Please do that before you sign off tonight. And if I don't see any other questions coming up here, Andy or Dave, do you guys got any final things to say before we close this out?
No, just thank you to Practical Farmers of Iowa for giving us this opportunity. We're excited about the business that we're in and anxious to help any of you that are looking to grow your or start your organic farm operations.
Yeah, Steve, I'd also like to thank you and Practical Farmers for the opportunity tonight, and thank all of the people that tuned in, and hopefully the people that will view this later on. I guess just one more thing, I'd like to say that you might think investors, it's this big scary deal that they're sitting in an office in some faraway land, and with the Iroquois Valley, that's not really the case. As I've gotten to know a lot of the board members and officers, personally, and things like that. It's a great group of people to be involved with. It's a group of people that I feel cares about my farm as much as I do, almost. And you're not going to get that anywhere else. And it's just a unique opportunity, a unique company with unique goals and a lot of unique things that they're able to do to help farmers. So I would just encourage anybody that thinks that your farm might be a fit or might be a fit sometime in the future. to contact Iroquois Valley and just kind of see how we can work together in the future.
Excellent. Thank you both very much. Andy and Dave, great having both of your perspectives on this. It seems like a really neat organization. And for those of you listening to this live or to the recording, just remember, like Dave said, they've been supporters of our annual conference, exhibitors at our annual conference in January in Ames, Iowa, for quite a while. So that's a great chance to talk one-on-one with somebody from Iroquois Valley Farms, see a little bit more about what they do, and get some one-on-one feedback about the kinds of things that you do and if you'd be a good fit. So seek them out at our conference next year. And thanks again to Andy and Dave for sharing everything with us tonight. Also, thanks to Claire and Teresa for help setting this up. You all have a good night. Hopefully we'll see you on our Farminar Friday at noon this week.